Good morning, investors and corporate. Welcome to SET Digital Roadshow 2021 Year-End Performance Review. This session will run about 45 minutes, including Q&A. During Q&A, investors may leave your questions in the meeting room chat box or use raise hand function. Then we will open your microphone so you can ask the question to the company directly. May I now invite Thai Oil Public Company Limited to start the presentation, please.
Good morning, investor and analysts. My name is Thosang Chaipravat, Vice President of Financial Planning of Thai Oil. And today I have with me Kun Chairat Aranyasatat, Manager of Chemical Value Chain Analytics, and Kun Nanchaka Bamrungrak Suksawat, Assistant Manager of Investor Relations, to be presenting on the three topics today. We'll be including key highlights, performance analysis, and market outlook. I will start the presentation with the key highlights. In 2021 has been a challenging year. However, we continue to see optimistic signs of recovery along the way. COVID-19 infections continue to rise. However, widespread vaccination and easing lockdown restriction in many countries have led to improvement in oil demand. In 2021, you can see on the left-hand chart that gasoline and gas oil demand has recovered back to pre-COVID level. Only jet fuel is still lower than pre-COVID level due to limited international flights. Energy crisis late last year from tight supply of natural gas and coal has led to gas to oil switching and higher oil prices. Crude oil price ended the year at $73 per barrel, over $20 increase year on year amid limited OPEC production increase. And given the recent geopolitical events, especially Russian and Ukraine conflicts, has pushed up the oil prices to over $100 per barrel recently. In terms of the key performance highlight, market GRM in Q4 last year rose to $5.4 per barrel from $1.6 in Q3 from higher crack spreads, especially gas oil and diesel. This is as a result of improving oil demand. For 2021, top reported market GRM of $2.2 per barrel, a significant improvement from 0.4 in 2020. From improving oil demand as a result of reopening of many economies. For aromatics and LAB, with softening PX and benzene margin from power rationing in China in Q4, while LAB spread is still doing well from strong cleaning product demand, GIM contribution from aromatics and LAB for 2021 was at $1.7 per barrel, slightly higher than 2020 at $1.5 per barrel. As for base oil spread in Q4, it softened from Q3. However, it's still at a very high level compared to historical average due to the tight supply of base oil. Although margin of base oil declined in the second half of last year, it was considered a golden year for Thai lube base with GIM contribution from base oil business at $1.6 per barrel in 2021 compared to $0.5 per barrel in 2020. And with over $20 per barrel increase in crude oil price last year, Thai Oil has booked a stock gain of $4.7 per barrel and report accounting GRM at $6.9 per barrel. In 2021, a significant improvement from minus $1.9 per barrel in 2020 due to stock loss. In terms of the net profit, last year was the biggest profit turnaround for Thai Oil. We reported a net profit of 12.578 billion baht, and this comes from several of extraordinary achievements that we have done last year, including the operational flexibility. We minimized the jet production and maximized other products like diesel and gasoline, which have higher demand. And we also maximize our subsidiary and high value product contribution. We also try to also optimize our crude cost as well, trying to procure crude from the lowest cost source. We also have the other operational and commercial optimization to manage on product sales. And we have stringent cost reduction throughout last year, and we have implemented an innovative financial instrument, which is the revenue hedge accounting, to minimize on the FX translation loss. Not only we do the profit improvement, we also implemented what we call the three-pronged strategies to cover on our people, our short-term profit maximization, and also on the long-term strategy execution. For people, we have our people is the first priority, the safety of our employee. More than 99% of our staff is already vaccinated, and we have implemented the business continuity plan to ensure that there's no disruption to our operation. As for the short-term profit maximization, I have already explained on the previous page. And for long-term strategy, we have executed on our three what we call 3V strategies, value maximization, where we have a good progress on CFP at 81% last year. We also extend our value chain into petrochemical by completing our investment in the olefin business. We invested to buy 15% of Chandra RC, which is the largest olefins producer in Indonesia in the quarter last year. We also implementing our value enhancement to expand into the region using our subsidiary network in Southeast Asia. And we also do the value diversification to diversify our business portfolio outside of the petroleum and petrochemical business. Last year, we have restructured the power business, divest marine business, and also invested into startups and PC. In terms of net zero pathway, Thai Oil is developing a clear roadmap to achieve net zero. We have set 2 key targets for net zero. The first one is to achieve net zero greenhouse gas emission by 2060, and the second one to have 25% of the green revenue. We plan to achieve this target through 3 strategies. The first one is business portfolio transformation by shifting our portfolio toward greener businesses like renewable energy. Second strategy is decarbonization operation to improving energy efficiency. We are also studying on the green hydrogen and carbon capture storage technology to be able to capture the CO2 emission in the future. And the third strategy is a low carbon society with the natural-based solutions like forestation. As for 2022, we see 2022 will be a year of fundamental recovery from economic openings, which expect to boost oil demand back to the pre-COVID level. We have a support from gas to oil switching and more traveling, which would be a potential upside for our refinery margin. As you can see on the right-hand side, Singapore GRM in the first quarter rise to over $7 per barrel from around $5 to $6 per barrel in the first quarter. And Thai Oil has been maintaining high utilization rate to capture this rising demand and increasing domestic sales. As I mentioned earlier, for the investment in Chandra Hassi, we have invested $900 million to buy 15% shares in Chandra Hassi, and we funded this investment with a short-term bridging loan from PTT and financial institutions. And we have come up with a capitalization plan to repay, to take out the bridging loan and the utilization transaction will consist of two transactions. The first one is GPSC share sale, and the second one is the equity offering. And we have three objectives on the recapitalization plan. The first one is to repay the bridging loan. The second one is to maintain our optimal capital structure, and we would like to lower our net debt to equity to be at 1 times or lower. And the third objective is to maintain investment grade credit rating of our company. We expect to complete this recapitalization plan in 2022. On the next page, let's show the detail of the recapitalization plan that we just announced last month after our board approved on the structure. For equity offering, we are offering up to 275 million new shares with to be allocated up to 239 million shares for public offering and up to 39.9 million shares for over allotment of greenshoes. For the public offering tranche, the company will allocate not less than 80% to existing shareholders, and they can all do subscription as well. And the remaining portion will be offered to new investors. Pricing will be done through a book building process. And we believe that this structure will allow the company to ensure fund certainty while minimizing dilution to existing shareholders. And we expect to complete this transaction by the second half of this year. Another transaction, GPSC share sale, Top will sell 10.78% or 304 million shares of GPSC to PTT or Siam Management Holding. The company will receive total proceeds of around 22 billion Thai baht and will book gain from the share sale and reclassification of GPSC shares on our P&L. After the sale, Thai Oil will still hold 10% in GPSC, and we expect to complete this transaction in the second quarter of this. And key benefits of the recapitalization, as I mentioned, that it will help improve our financial position where our net debt to equity will be lower below 1 after the repayment of the bridging loan. And we believe that this should support on our credit rating, and we think that we will be able to maintain the investment grade. With the recent discussion with Moody's, S&P, and Fitch, they still maintain our credit rating. The transaction will also benefit Thai Oil in terms of the P&L, the gain on our P&L, and it also allows us to be in the best position to achieve our strategic direction for future business expansion. For the next part will be on performance analysis by Khun Nataka.
Thank you, Khun Thorsan. So let me start quickly. Let me quickly recap in terms of the full year and Q4 performance highlight of Thai Oil. Let me start by the refinery BU first. As you can see in the top left graph shows the top and Thai Oil refinery utilization compared with industry utilization rate. And in Q4, we ran quite high, around 109%, significantly improved from Q3, mainly because of better product spread, petroleum product spread, I would say, and that's mainly because of the increasing activities and also the easing lockdown measures. So that's why Thai Oil run high in Q4. And if you compare with the industry average, we still run above industry average as well. And for full year, we run at 100%. And in terms of the domestic oil demand, as you can see in the table, in Q4 last year, the total oil demand improved around 1%, mainly in the jet and gas oil. So that's why we can run high. And in terms of the domestic sale and export, in bottom graph shows that full year last year we still sales in domestic around 80%. Actually, it's lower year on year, mainly because of the lower oil demand pressured by the COVID-19 situation. And we export around 20%, consisting of CLMV country around 12% and other at 8%. And if you move to the next page, in terms of the GRM of Thai oil, in Q4, we report the market GRM at $5.4 per barrel, significantly improved from Q3, mainly because of the better petroleum product spread. As you can see in the upper table shows that all of product spread, especially gasoline and jet and diesel, improved significantly due to the economic easing restriction in many countries and also reopening of economies. And for full year, we report the market GRM at $2.2 per barrel, significantly improved from 0.4 in last year. And as you can see in the Dubai crude oil price in the graph in the middle shows that it's significantly improved from last year at $50 per barrel to $73 per barrel, the end of 2021. So that's why we record the stock gain around $4.7 per barrel last year, and for the accounting GRM at $6.9 per barrel. And moving on to the aromatics BU, next page, you can see that hello, can you hear me?
Yes,
So,
ค่ะ
so in terms of aromatics BU in the next page number 17, we have the GIM contribution from these BU in Q4 at $0.8 per barrel. So it's lower Q1Q, mainly pressured by both of PX and benzene product spread that was lower, mainly due to the weakening downstream products demand, such as the PTA polyester from power rationing and in China, and also the new supply addition in China as well. And in full year, we record the GIM contribution around 1.7 from the aromatic BU. And in terms of the lube-based oil, the contribution in Q4 of lube-based oil BU significantly dropped from Q3. In Q4, we reported around $0.8 per barrel, mainly pressured by the lower base oil product spread. As you can see in the upper table, shows that the lube-based oil product spread significantly lower, mainly pressured by the higher regional supply. The feedstock, lube-based oil feedstock supply from the increasing refinery run rate. So that's why it's pressured the lube-based oil product spread in Q4. And if you see for the full year, we have the record high GIM contribution from these BU around $1.6 per barrel, mainly because of the record high base oil product spread that supported by the tight supply situation from the refinery run cut during the COVID-19 situation. And if you move into the next slide, shows the integrated margin. Starting with the upper left graph shows the gross refinery margin. As I mentioned, in last year, we report $2.2 per barrel, improved from 0.4 from the 2020, mainly because of the better COVID-19 situation. And Thai Oil is not the pure play refinery. We are the fully integrated refinery with petrochemical, aromatic, and lube-based oil. So that's why we have another contribution from these two BU. In last year, 2021, we have the contribution around $3.4 per barrel on top. So that's why we have the GIM around $5.5 per barrel, and with the huge stock gain around 4.6. So we have the accounting GIM at $10.1 per barrel. And if you move into the group cash cost side, the bottom right graph shows that we still maintain the group cash cost at low level. As you can see, we have around $3.1 per barrel for the cash cost, consisting of 2.2 of the operating cost and $1 per barrel for the interest expense. So if you would like to get the EBITDA level of Thai Oil, you just simply use the accounting GIM, $10.1 per barrel, minus with the operating cost at 2.2. So we're going to get like roughly around $8 per barrel last year for the EBITDA level. And last year we ran at 100 million barrel. So roughly the EBITDA level is around 800 million USD. And the next page for the power sector. In this power BU, we have two assets. The first one is the top SPP under our own operation. And another asset is the equity holding in the GPSC. So in fourth quarter, we have the lower contribution from power. We have around 525 million Thai baht. Net profit contribution from this BU, lower Q-on-Q, mainly pressured by the lower GPSC contribution due to the lower industrial user. And for the full year 2021, we have a net profit contribution from these power BU around 2.5 billion Thai baht. And next, it is about the olefin business. So in this business, we have the investment in Chandra Asri by we have a company named Top Investment in Indonesia. Right now, we holding in we held the stake in the cap around 15% since September. So that's why Thai Oil Top Investment in Indonesia has recorded share profit from the cap since September onwards. So last year and in Q4, this BU still be pressured from the pressuring the product spread of polymers product, mainly pressured by the demand that was pressured by the COVID-19 situation and also the supply, the increasing supply in the Northeast Asia market, especially in China and South Korea. So that's why we still have record loss from this BU. And next one is the performance breakdown, just the wrap up of each BU contribution. So the first column, petroleum, lube base, petrochemical, and power, I've already mentioned. Another thing is that the other business in the fourth column in Q4, we have record net profit around 246 million Thai baht, which is lower Q on Q. That was mainly from two business units. For example, the solvent business unit and ethanol business unit. For solvent BU in Q4, it's a lower Q on Q, mainly pressured by narrow gross margin from abundant supply in the market. And also for the ethanol BU as well. Ethanol BU, the lower contribution Q on Q, mainly because of in last quarter, in Q3, there were one-time gain on the UBE, which is their subsidiary. The UBE share sales that we record the extra gain in Q3. So Q4, there's no this gain. So we have record lower contribution from the ethanol BU. So all in all, if we combine of every BU, we have consolidated net profit in Q4 at 5 billion Thai baht, and for full year it's around 12 billion Thai baht. So if you see the next page, this is the contribution of each BU. In the graph, you can see that in the total net profit billion Thai baht, that it's consisting of the net operating profit at 5.5 billion in the dark blue portion, improved Q on Q mainly because of the strongly improved in the GIM contribution. And we have a huge stock gain at 15 billion Thai baht. So that's why we record high net profit in this year. For net profit contribution, and for full year, 30% still mainly from the petroleum and lube base oil, 26% each come from the petrochemical BU and power BU, and the remaining 10% from other business such the ethanol and solvents. Next, in terms of the consolidated P&L. In this page, I would highlight in terms of other items in the P&L. For example, in Q4, we have net realized loss on the financial instrument, mainly the realized hedging loss on the IFAT crude that we did in Q4. So this is partially offset by the huge stock gain that we get in Q4. So our EBITDA in Q4 is around 6 billion, remains strong, and for full year we record an EBITDA level at 28 billion Thai baht, significantly improved mainly from the stock gain and also better GIM contribution. And so net profit, as I mentioned, we have around 12 billion Thai baht for the full year contribution in this year. Next, in terms of the cash flow statement, as you can see, we have in 2021, we have operating cash flow around 10 billion Thai baht. That was significantly improved from 2020, mainly because of better all of BU that was resulted from the better product demand, especially the petroleum. And in terms of investing cash flow, last year we did invest in CAP, Chandra Asri around 30 billion, and also the CAPEX in the CFP around 34 billion. So from the investing cash flow, we have cash outflow in this activity around 62 billion. So if we combine operating cash flow and investing cash flow, our free cash flow last year, 2021, still be negative. And for the financing activities, we have loans proceeding mainly from the bridging loan that we did in order to acquire the CAP around 30 billion Thai baht. And if you deducted the loans repayment and interest and dividend, so all in all, the cash last year was cash outflow around 43 billion Thai baht. And if you combine with the cash and short-term investment, beginning of 2021 is 71. So the ending of cash position, we have around 30 billion Thai baht for the last year. So next, in terms of the balance sheet highlight, the total asset of Thai Oil is around 362 billion Thai baht, which was improved from the 30th of December 2020, mainly because of the non-current assets. As you can see in the chart, we have significantly increased in terms of non-current asset, mainly from the investment of the CAP, Chandra Asri, and also the CAPEX spending for the CFP projects. And in terms of the debt side, interest-bearing debt, Thai Oil has interest-bearing debt in terms of USD around 5.4 billion USD. And if you deduct the cash on hand around 30 billion, so net debt it's around 4.5 billion USD. And most of it, it's the USD currency. And our interest rate is quite fixed at 70%. And in terms of the financial ratios of both net debt per EBITDA and net debt per equity, still in the temporary high in this period. Last year, we have net debt per EBITDA around 5.4, and net debt per equity is around 1.2. We think that in going forward, if we have already done the recapitalization plan, so net debt per equity will be normalized at below 1 times, as Khun Thorsan already mentioned. In terms of the credit rating agency, 3 of credit rating agency also rate us in the investment grade credit rating. So I think that's cover my part of financial highlights. Next, I would like to hand over to Khun Chairat for the market outlook. Thank you.
Okay, hello, good morning. Okay, for today, I will present for the outlook. We shall start for crude oil, refinery, petrochemical, and base oil and bitumen. Okay, let me start for the crude oil first. At this moment, many people try to concentrate for the Russian-Ukraine conflict right now. Why the people try to concentrate for this issue? Because actually, Russia is the producer of the crude oil around 11 million barrels per day, and they export for the crude oil around 5 million barrels per day, is around 5% of the global supply, and more than half of that the volume support to EU and including to USA as well. That's why at this moment, when we have some trouble in the oil market, they have some impact to the crude oil price. And beside that, for the production outage in key producer in picture B, we can see that at this moment, many people who produce crude oil, they have some trouble as well, including Canada, USA, and OPEC country as well. And for the picture C, For the picture C, we can see that the OPEC spare capacity at this moment, when compared with last year, they have the spare capacity just only 2 million, allow 2 million barrels per day. Compared to last year, it's around 4.4 million barrels per day. That's why they have some trouble in the crude oil market. The oil price jumped a lot. Okay, and for the next page, we shall see for the who can fulfill for the crude oil in the world right now. For the picture A, is the U.S. crude oil production. We can see that for the last year, the crude oil production from US is around 11 million barrels per day. But for this year, the US, they invest a lot for the capex. Then for this year, the crude oil output shall be increased around 1 million barrels per day, shall hit around 12 million barrels per day for this year. This is for picture A. And for the picture B, at this moment, many people try to concentrate as well for the Iranian crude oil production. They try to check the news regarding the Iranian sanction lifting. At this moment, they have some potential and good news for the Iranian sanction lifting. That's why we expected that and the production of the Iranian crude oil shall be increased maybe in the second half of the year. Okay, and for the picture D, we try to balance for the demand and the supply of the crude oil. And at this moment, we can see that from the Q2 onward, the crude oil supply and demand side shall be a little bit surplus from the second half of the year. That's why at this moment, the crude oil price, they have the trend to cool down. For the next page, we shall move to the Singapore GIM right now. At this moment, we can see that the Singapore GIM is around 6.5 Q2 date for this year, compared with the last year at around just 3.4 US dollar per barrel, because they have a lot of improvement for the global demand. For the next page, we can see that the global oil demand actually for the gasoline wise improved a lot. And at this moment for the gasoline and gas oil and jet onshore inventory a little bit lower than the last year in the picture B. For the next slide. For this page, we shall see for the gasoline. For the picture A, we can see that the gasoline demand at this moment, they have already recovered to pre-COVID level already at this moment. And for the next page, for this slide, we shall concentrate for the gas oil or diesel oil as well. We can see that for the picture in left-hand side, the global gas oil demand increased a lot and over the pre-COVID level at this moment. And for the right-hand side for the fuel oil demand, the fuel oil demand as well, everything improved. That's why this moment when we focus on the Singapore GIM, because gasoline demand improved, jet a little bit improved, gas oil and fuel oil as well, everything improved. That's why for this year, when we compare with the demand side, the growth of the demand improved a lot. That's why Singapore GIM improved for this year. Okay, and for the next page, please. Okay, when we compare with the refinery size and compare with the global oil demand, we can see that in the blue shade. The blue shade is the APME demand growth. Compared with the colorful bar chart is the additional CDU capacity. We can see that for this year, even we have a lot of the CDU addition capacity coming into the market, but for the demand side, it's still overpaced for the additional CDU capacity. In the long term as well, the CDU capacity shall be lower than this year because they have some trouble from the past year during the COVID situation. That's why many refineries try to slow down for the additional capacity. But anyway, for the demand side, quite similar, still around 1 million barrel per day. That's why in the long term wise, the demand still good compared with the lower CDU capacity. Okay, for the next page, please. Okay, for this page, I think we shall pass because of this. Okay, let me move to the aromatic supply demand growth is better. Okay, for the aromatic side, when we compare with the last year is very good. For the aromatic size for the PX, but for this year we still have some trouble regarding the new capacity addition. For this year we have around 5.1 million barrel. No, million ton coming to the market when compared with the demand side just around 1.3. That's why for this year for the PX market a little bit softer than the last year. But anyway, for the demand side still okay. When compared with the benzene side, the picture looks similar to the PX as well. We have the additional capacity coming to the market around 2.5 million barrel per million ton. When compared with the supply, the demand side around 1.1 million ton. Then for this year, for for both PX and benzene, the spread is supposed to be a little bit softer than last year. For the next page, please. For the olefin side, actually for the olefin side, for the supply side in the blue color, we can see that for both high-end HDPE, including the PP, we have a lot of the new capacity coming to the market. But anyway, with strong demand growth in the yellow shade, we can see that for both high-end and the PP, the demand is still okay. Then the olefin market is supposed to be a little bit stable for this year. For the next page, is the base oil and bitumen. For the base oil market, in the picture A, left-hand side, we can see that with the refinery run rate at higher than the last year, we may have some feedstock coming from the refinery to supply to the base oil refinery. It means that at this moment for this year, the base oil output supposed to be higher than last year. But anyway, when we compare with the picture B, for the picture B, the additional capacity coming to the market for this year a little bit softer than the last year. Then for this year, when we balance for this situation, we can see that, okay, even we have higher output from the refinery, but anyway, for the additional capacity from the new capacity is lower, then the base oil market supposed to be a little bit softer, but still okay when compared with the past record. Okay, that's all for the base oil. Next page. Let me conclusion for the outlook for the crude oil wise. We foresee that the demand recovery shall be support for the crude oil demand growth. And for the refinery side, at this moment with the good refinery margin for the easing restriction and returning of the petroleum demand above the pre-COVID shall be support for the refinery margin. And for the aromatic side at this moment, we may have a more supply for the makeup capacity, especially from China amid firm demand growth. And olefin wise shall be the same as well. And for the lube base, we may have a softer base oil spread because of the recovery refinery run rate. That's all for the outlook. Thank you.
That's an our presentation. Do you have any questions?
We still have 5 more minutes for Q&A. So if you have any questions, please feel free to send through the chat box or raise your hand to open your microphone. Thank you. Is there any questions? So I think if there are no any questions, I think the session has come to an end. On behalf of the Stock Exchange of Thailand, we would like to thank you very much, investors and Thai Oil, for joining the conference. We hope to welcome you all again in the next quarter. Thank you very much and have a good day ค่ะ
Thank you ค่ะ